Welcome to Accounting and Tax Made Easy. This channel was created with you in mind. On this channel, we define and teach accounting and tax terminologies in basic language so you can understand these terms easily. Please show us some love, subscribe to our channel, share this video with family, friends, colleagues, and please click the like button below. Today we'll be talking about taxation. What is taxation? Taxation is the imposition of compulsory levies on individuals and entities by government authorities. In other words, taxation is the process of collecting taxes. Let us go further by defining tax. What is tax? Tax is a compulsory financial charge or some other type of levy imposed on a taxpayer by government organization for various use and reasons, such as to fund government spending and various public expenditures. Tax is the most important source of income for government authorities of most countries. Almost all countries levy tax on its people: citizens, residents, and non-residents. Please watch out for our future videos where we'll be touching on these terms in more detail. Who is a taxpayer? A taxpayer could be an individual or a company. A good example of a taxpayer is you. Yes, you. No one on earth can avoid paying taxes. Now we'll be talking about the different types of taxes. Taxes are classified into two. We have direct tax and indirect tax. Direct tax is a form of tax that is levied on the income or profit of the taxpayer. Examples include personal income tax, company tax, commonly known as corporate income tax, capital gains tax, inheritance tax, and so many others. Indirect tax, on the other hand, is a form of tax that is levied on goods and services. It is levied on a taxpayer through an intermediary. Examples of indirect tax are value-added tax, commonly called VAT or VAT, excise duty, customs duty, and so many others. In future videos, we'll be explaining these types of taxes in details. Now you may be wondering why government imposes taxes on its people or companies. Well, there are various reasons, and we'll be touching some of them below. First is to raise revenue for government spending. Economies are run by the taxes that are collected from its citizens. The income raised are used to build public infrastructures such as roads, schools, hospitals, and so many others. Taxes are used to steer economic activities and encourage a sector. Example, if a country wants to boost activities in the agricultural sector, it will grant incentives to companies that operate in that sector in the form of tax holidays, reduced corporate income tax rates, and so many other ways. Taxes can be used to influence or correct social habits. An example is the soft drinks industry levy in the United Kingdom, which was created to help reduce sugar in soft drinks and address childhood obesity. This tax is levied on companies that do not reformulate the sugar content in their products. Taxes can also be used to fund a deficit state budget. A deficit budget is when the planned spending by government is higher than its expected revenue. For example, the government may have plans to build more roads, hospitals, and other public infrastructures, but the expected income or revenue is lower than the amount required to fund the spending. Some countries resolve this by increasing their tax rate or imposing new forms of tax to fund the additional spending. There are many other reasons why country levies tax. We have looked at some of the reasons above, and you may already be thinking of one or two more reasons. Thank you so much for watching today. I'm sure you have learned a few things. Do stay tuned to this channel by liking this video, subscribe, and share this video with friends and families. Till next time, do have a wonderful day. Goodbye.